Hello and welcome to Zee Commodity Capsule. Gold prices are hovering above $4,200 an ounce on Monday after having witnessed a slight weekly decline as traders awaited Federal Reserve's final policy meeting of the year, where officials are widely expected to cut the interest rate. We have seen that traders will now also be scrutinizing the Fed's updated economic projections for 2026 and beyond. In fact, Tuesday's US's jobs opening JOLTS report is the final labor market reading before the Fed's announcement, and this is going to be closely watched. Meanwhile, China's central bank increased its gold reserves for the 13th consecutive month, bringing the holdings to roughly 74.12 million troy ounces. LME copper, meanwhile, on Monday's session has touched a new life high at $11,749 a ton, bolstered by the expectations of an interest rate cut by the US Federal Reserve. Along with it, we have seen that the deliverable copper in Shanghai Futures Exchange declined by over 9% by the end of the last week. And this is the second consecutive week of declines. Not just this, copper inventories in US COMEX exchange, on the other hand, has continued to increase after hitting a record high in late November. We have seen that supply concerns are also fueled by mine disruptions and China's major smelters agreeing to slash output by nearly 10%. Oil prices are hovering close to two-week high, with Brent crude prices trading close to $64 a barrel, while WTI crude, after a span of nearly 2.5 weeks, has managed to surge above the $60 mark. We have seen that the commodities garnering some support as investors expect a likely US Federal Reserve interest rate cut this week to lift the economic growth as well as the energy demand, while monitoring the geopolitical risk that threatens Russian and Venezuelan supply. Both the contracts, that is the Brent and WTI crude, closed Friday's trading session at the highest levels seen since November 18. Markets are pricing in an 84% chance of a quarter point cut at the Fed meeting, which is scheduled on Tuesday and Wednesday. Meanwhile, US has rammed up pressure on Venezuela, including strikes against boat it said were attempting to smuggle illegal drugs from the OPEC members, as well as the talk of military action to overthrow President Nicolas Maduro. Last but not the least, Malaysian palm oil futures have fallen on Monday, weighed down by weakness in rival Dalian and Chicago soy oil prices due to concerns about the slow pace of Chinese purchase of US soybeans. Palm oil on Bursa Malaysia fell below 4,100 ringgit a ton. Shipments of US crops to China are accelerating after a tense tariff war stalled trader for months, with at least 6 bulk cargo vessels scheduled to load with soybeans at the Gulf Coast terminals through mid-December.